Aterian has a portfolio of African-focused critical and strategic metal assets. It also has 17 assets in Morocco. Well, there's been no summer lull for the company in 2024 as it grows and secures more finance and offtake agreements. I'm delighted to be joined by the chairman, Charles Bray. So, Charles, a metal concentrate offtake agreement between your Rwandan subsidiary and a major international trading house, a milestone. So when can you start to deliver? And what do you get in terms of finance for those deliveries?
Yeah, we anticipate being able to start delivering in this quarter. And what that means is that we're going to be getting in touch with all of our various suppliers. We're going to be securing those relationships that we've established some months ago, starting to bring product in, upgrading it, and then delivering it off to as part of the offtake agreement. So what that means is that we should be driving revenue from this quarter and growing it. We're hoping to increase it by 100% every quarter hereafter until we get to around this time next year. So starting slow, but very determined and a methodical approach.
Okay, just repeat those mathematics, that figure there. You're wanting to have a 100%
Yeah.
increase in revenue across the whole of the group?
Yes, well, this is our only real revenue driver. If you exclude the potential for partnerships and the like, and we just focus on the trading, what we anticipate is that we will be able to utilize probably about half of that facility in the first quarter, so $500,000. What we would ideally like to do is to have that in the first quarter be our revenue number. And then doubling that, let's say, to 1 million next quarter, 2 million the quarter thereafter, and 4 million per quarter, just going forward on a regular rolling basis.
I'm just wondering what this offtake agreement could lead to. Do you only deal with majors? Because after all, Rio Tinto is already a joint venture partner in your lithium project in Rwanda.
Yeah, we would love to brag about the name of this partner. However, due to confidentiality arrangements, we just simply can't. No, we don't only deal with majors. We'll deal with anyone who can help us to achieve our goals, who has good reputation and who's willing to live up to all the traceability standards and all those other regulatory requirements that are necessary in dealing with these sorts of metals. But what it means is that if we can achieve, if you just imagine, if we can achieve 1% to 2% margin, we can cover the cost of the finance on a regular basis. So 1% per month over a course of a year is 12%, and that almost hits the finance number. The margins we're actually anticipating are more along the lines of 4, 5, 6%. And so it can be very, very lucrative. And ultimately, it can lead to us using those profits to fund the exploration efforts. And that's the key.
Okay, so in the most recent RNS, it talked about the major trading house, which will remain nameless. It also talked about the financial investor providing the $1 million secured trade finance debt facility. Are they one and the same persons, entities?
No, they are not. And again, it comes down to confidentiality and us just wanting to make sure we don't jeopardize those relationships. As I said, we want to grow over time. And so it's important to, one, make sure that we live up to all of our obligations in the first place. But then as we're growing, to make sure we maintain those relationships and don't strain them. The 14% or 14.4% finance facility is a little bit on the expensive side, at least in our view, but we anticipate that coming down again over time and as we demonstrate our capability to deliver.
Okay, yeah, I was going to talk to you about that because the interest rate on that loan is a bit punchy at 14.4%.
Yeah.
But I was wondering what flexibility does this loan provide? And is there any risk associated with this loan? Are the conditions watertight?
The conditions we believe are absolutely watertight. Our lawyers are working on that right now. What we, the risk, the risk is dilution, but it's an upside dilution risk. This is a fixed conversion price facility. So the investor has the opportunity to convert the debt into equity at an approximate 30% premium to our existing share price. So we're very happy with that. And we believe that it just indicates that they view this facility as being a driver to our profitability and thus to share price appreciation. There are no other conversion terms subject to us keeping the facility in good standing. Then they can convert it £1 per share. So that's what we're anticipating and looking forward to happening.
Okay, so they're confident about the growth potential that Aterian provides. But so in terms of news flow, is Rwanda all that is providing the low-hanging fruit at the moment?
That's a great question. And the answer is no, not in the slightest. We have, over the next 3 to 4 months, a tremendous amount of news flow. If you want to start in Botswana, we recently acquired some properties there. Most recently, Arc Minerals and Kavango Resources have announced some really seemingly very positive finds on copper in the Kalahari Copper Belt. Our licenses are located just in between those two licenses. So we're very optimistic. We've been doing some high-level reinterpretation of geological survey work. And so we're looking to see how that fits in with their recent announcements. In Morocco, we have been looking to rationalize our projects there. As you mentioned, 17 projects, that's a lot. And it's in reality, it's a bit too much. So we're looking to rationalize, potentially dispose of some of those assets, but also to focus on them. We announced to the market that we have a drill program that we're looking to start any day now. We're in the process right now of getting all the community consents, all the regulatory approvals, getting the access roads built. And we anticipate very shortly announcing that drilling has commenced in Morocco. And then finally, as you said, in Rwanda, it's lower hanging fruit. There, it's about revenue drivers from trading. But more importantly, it's also about the joint venture we have with Rio Tinto. Again, their community consent has been achieved on most of the area. We have 1 or 2 areas where we need to just get a couple boxes ticked. And drilling, we expect to commence any day now. So we think that in 12 short weeks, we'll have trading revenue announcements to make. We'll have announcements to make on drilling results in both Rwanda and Morocco.
So when will that revenue actually be going into your coffers? It's one thing announcing that revenue is on its way, but when will it arrive?
Yeah, by year end, we're very, very hopeful that we will have some profitability to point to build on. And that's the most important thing, really to build on it, even though, and I keep saying this over and over, some shareholders don't like to hear it, but we're going to go slowly. We're going to get this done right. And if we can't do it that way, we're not going to do it. But we really believe that this is a very strong leg to stand on and that it can drive profitability and remove our need to go back to shareholders for new equity capital.
So is the risk reward scenario for shareholders still excellent?
I believe so. It really is. We have a tremendous amount of news flow with respect to drilling results. Every indication we've had in terms of feedback from, let's say, some of the larger investors, the more institutional types, is that they're waiting to hear back on those results. Once we get those, let's say, announced, we can then start to talk about future joint ventures. We can talk about new capital into the company in relation to projects, and we can talk more and more about trading and how that's driving revenue and profitability.
Many thanks. Charles Bray, Chairman of Aterian. Thank you very much indeed.
Thank you.